Hey everybody, it's Jeff Beers from the 40 Finance channel, and today I'm highlighting my worst performing stocks from 2018. Every stock portfolio has its duds, and I'm going to highlight mine from last year. All right, first on the list is Turtle Beach Corporation. This is a stock that I'm super high on and excited for over the next 2 to 3 years. I've done several videos about Turtle Beach, and I'll link to some of those below. But from a performance standpoint in 2018, heading into the first part of this year, Turtle Beach certainly hasn't given me back the love that I've given it. So looking at the 1 year performance from my standpoint, Turtle Beach today is at $15.05. I made my first purchase on September 7th, 2018. I got 25 shares at $24.58. This was coming off of a high that cleared over $30, and I was trying to get in on a dip, so I thought. And as we see here, the dip sort of continued. On 9/26/18, I bought another 25 shares at $20.33. And then the slide, which headed into December, and obviously December had its own ripples with the whole Trump and trade. And then fourth quarter, no one was quite sure how holiday sales did. And Turtle Beach survived that stretch pretty good. And so I felt confident. I knew I wanted to buy again before their Q4 earnings come out, which is very shortly, in the next 7 to 10 days. I don't have the exact date. So I got another 25 shares for $15.99, trying to do some cost basis adjustment, hope for a good earnings report in the next few days that'll sort of spike it back up if all goes well. But from the standpoint of what I paid for and what it's worth now, Turtle Beach has been a little bit of a loser for me. I got 75 shares at a cost basis of $20.30. That led to an overall loss over the past 12 months of $383. So hoping to get that back in the next, maybe even super shortly, but certainly over the next 6 to 8 months. I feel pretty good about Turtle Beach bouncing back. I use this TipRanks dashboard all the time, give you an idea of what other analysts are thinking. Right now, the price target's $29.50, so you see as a 93% upside. So that's great. For the folks that got in after me in the $15 to $16 mark, I'm still trying to get to par. So hopefully that happens. You got a high pick of 40, average of course at 29, and then there's a low ball in there at 24. So Turtle Beach has done a lot of good things. I expect a strong Q4 earnings report. They've also been paying down their long-term debts very rapidly. So there's a lot of good signs in the market, but I'm going to need some statistics to get things heading in the right direction. All right, the next disappointing performer by far was Molson Coors Company, ticker symbol TAP, which is currently at $62. This is the brewer that makes Coors Light, anything that's Molson Canadian, all those things. They also have a host of premium brands in there like Blue Moon. Soul, I think, is one of their top products from last year, and they have some investment in the cannabis industry as well. So the story behind me buying Molson Coors is a little bit off of my traditional radar. Not a real big fan of consumer packaged goods in general, at least from an investment standpoint, because I just feel that whole world of grocery stores and packaged goods is just changing so fast, and little brands have such an opportunity these days to put a dent in the behemoths' paychecks, if you will. They can steal market share relatively quickly with social media and direct-to-consumer opportunities. So me owning this is a little odd, except that I'm a big Coors Light drinker, and I have been for several years. And so I kind of put the mindset of, one, I didn't have any exposure in consumer packaged goods. Two, I don't have a lot of dividend stocks. So I thought, you know what, just to sort of follow the suit of invest in what you know, I took a gander on Molson Coors. At the time I bought it here, which was, I didn't put the date there, but in April I got it for 20 shares at $71.98. And it's almost like as soon as I got in, man, that thing fell right off a cliff on some poor earnings projections that really continued throughout the year. So I literally got in probably at the worst time of 2018. I tried to balance it out a little bit. You see here in May, I got another 6 shares. It's about $64. And then as things sort of stabilized heading into late September, I purchased 24 at $62.76. That put me total 50 shares at $66.59 for the cost basis. Leaves me to a negative $229 loss. However, the dividends came in handy. So I'm not, like I said, I'm not a huge dividend investor, but it came in handy. In this case, I did earn $41.82 in dividends, bringing the net loss down to $187 over the past 12 months. I'll hold this stock for the foreseeable future. If you go through Molson Coors earnings reports, you can see obviously with the craft beer phenomenon, they're slowing light beer sales. That's not really a surprise, I think, to me or anyone else. But they have some other opportunities to sort of right the ship. So the first thing that they're doing is improving their balance sheet, their cash flow, their delivery systems. All those things from a fundamental perspective are really intriguing. On the sales growth side, though, is where they need to do a lot more work and have a lot more success. So growing sales in consumer packaged goods for a company like this and many others just like it is really going to be where the challenge is. So they have made a huge investment in the cannabis industry. They have a growing market share in Europe, of all places. So they have some things on tap, if you will, but we'll have to see about the execution. They stumbled a little bit on their Q4 report. They had some accounting irregularities they were sorting through, but they have committed to a increasing dividend. They have committed to increasing cash flow, and they have committed to improving their debt load. So there's some good things. The people who are running the business for what the business is, I think are doing a good job moving the money around. Sales growth is going to be the challenge. It's not an easy problem to solve. I'll probably stick with this stock for a while just to play the sort of fanboy of Coors Light. But for the last 12 months, it's been a loser, and that's the way it goes sometimes. As far as analysts' expectations for Molson Coors, you see there's not a whole lot of activity here. You got 3 of the top performing analysts. You got a 1-1-1, right? So buy, hold, and sell. Average price target is 64. You got a high of 80 and a low of 52. Honestly, I don't really think this price will change too much. What Molson Coors really needs is a good summertime. Okay, so the Q2 report, which won't come out till fall, that's going to be the key, because when there's outdoor festivals, concert, all those things, that's where they really need to bump their sales, because those are huge wins across the board. You think about concession stands at baseball games, right? Arenas, concerts. That's where Coors Light has to win the consumer. They don't really have to win it with Coors Light necessarily. Miller Lite's in there, but even away from the light brands, if they held those relatively steady or even lost a little bit and boosted some of their other brands like Blue Moon, they have some ciders and other things like that, then you could see some positivity and some momentum gaining. But I'm not really expecting a whole lot in 2019 from a share price increase. I think the wins for this company, if they happen, are going to be 3 to 5 years out, with kind of trimming the fat on the company and just focusing on profits and bringing those profits back in, sharing them as dividends. That's probably where this stock's going to go over the long term. So anyway, I hope you guys enjoyed it. Those are my 2 dogs of the year. And Turtle Beach, anyway, I think has a chance to go back up another 100% over the next 12 months. We'll see. But leave your comments below. Let me know what you think. And we'll see you on the next video.